I think it's a bit of a head scratcher, right? There's no real smoking gun. In fact, if you look at there's a lot of talk about what was going on with the Chinese currency and the impact on trade tensions. But if you look at yesterday's trading action, it actually was rallying in the morning. It wasn't until like midday where it started to sell off. It's around a little bit after. I think Bob Pisani talked about it yesterday.
Right.
That was around the time that Mnuchin said he was going to withdraw from
Saudi.
Yeah. But I think it's a bit of a head scratcher. I mean, this whole sell-off to me has been a bit of an anomaly in the fact that it came on the back of good news, right? I mean, initially, economic data was coming in strong. You got some talk of the Fed, a bit hawkish on the back of good news, and then the rates shot up, and then the market got a little bit worried.
Is this a head scratcher for you, or do you have a real explanation? Not that he doesn't, but, you know.
On a day-to-day basis, maybe it's difficult to pinpoint exactly what drives the market like yesterday, but I'm not that surprised to see the downward moves like this. We noticed that the small caps were falling ahead of the large caps. They started to decline about a month ahead of the large caps.
Okay.
And when small caps can't keep pace with the large caps, so the concern, we call it bearish divergence, is when the large caps are making new highs, but small caps are falling. And that means that there might be some economic weakness because a lot of times the large caps can be clients of the small caps, and it doesn't work when they're diverging. And the last time we saw that was right before the global financial crisis. Actually, not right before. It was about 15 months before. But then we only saw it once again right at the top around 2000. So it's a warning sign and maybe an early warning sign, but the other warning sign that's more recent is how quickly the volatility, so like volatility convergence, almost bearish divergence, volatility convergence, and on the volatility, the large cap volatility spiked so that it reached the small cap volatility.
Right.
And that matters because that means that there's no safety in the large caps. And that has only happened twice in history, and subsequent declines after that, too. So not only am I not surprised.
The two times in history you're saying are still prior to 2000 and prior to 2007, the 15 months prior, or no?
For the bearish divergence.
Right.
Now.
But the second piece that you're talking about.
The second piece, there was one in 2011, in November 2011,
okay,
and one in August 2015. And once was at the head of an 8% decline in 2011, and in 2015 it was at the bottom of the decline. The market came back up and fell again. So in both cases there were subsequent declines, and again that happens because when there's some fear in the economy and of the markets, right, then you see that the large cap volatility will move towards small cap volatility.
But I'm going to take good news away from that, at least the second part of what you're talking about, because those were hiccups along the way. The first example you cited is actually much more nerve-wracking, but the question, of course, is whether that will actually correlate to where we are today. Dan, do you have a take on that?
Whether the small cap divergence is going to correlate with...
Yeah.
No, I think
with a crisis.
Well, the reality is like there's a lot of talk about how small caps are finally in a correction now. But if you look at the history, small cap relative performance, I think, peaked in like 2013. I mean, it's been, and from that perspective, it's been a relative bear market for a long time, and it's because the fundamentals haven't really kept up with the large caps. And, if you look at earnings growth over the last 3 or 4 years, they've actually undergrown. Whereas usually you'd think when growth is good, they're actually outperforming. Their leverage is close to all-time high. They have a huge portion of their debt that's in floating rate as opposed to fixed. I mean, there's a lot of issues that are specific to small caps that are the cause of a lot of this divergence we're seeing today. I don't think that means that the overall economy is going to go down the tubes. Actually, I think that the fact that everybody today is so focused on a repeat of 2008 tells you a lot about sentiment and where we are today, which I would say is contrarian bullish.
So were you buying yesterday afternoon?
Well, we've held a very bullish position. I mean, we're very bullishly positioned and cyclically positioned in our portfolios. It's kind of like a repeat of earlier this year, right? If you look at if you had sold after the big sell-off, the last one in March, the market's up quite a bit since then, and I think that's the case today.